so let me start the recording, move over the charts, get this onto the right one. Come on, there we go. Oh, you can't hear me, Insulator? You guys can't hear me? Let me see here.
I can hear you.
Oh, you can. Okay, thanks, Big Daddy. You're messing with me. All right. So this morning, as I said, I didn't have a great feeling about it, especially on the semi side. Let's walk through the day and see where we are and what we got coming. So VIX, this is the first candle in the morning there that we were talking about. This is the 10 a.m. ones. This is the one that opened up at 10 a.m. Pushed on up a little bit to the 4-hour 9, gave us a little bit of spike of trouble. Which was reflected in the same candle here in ES, which was basically at support on the 4-hour 20 when we opened, and then struggled to maintain. The 10 o'clock candle also came down. We do have a nice support range here, though. So trending support is giving us. I'll just give you this little bit of idea of what that looks like. So a little bit of support here on this. So we're definitely following that. We need the 4-hour 9 to get above the 20. We are going in that direction. Overall on ES, this looks like kind of a nice curl down on the overnight and push up. But since it's so recent, and since we still haven't taken out yesterday's high, we are still in a breakdown. So here's the ultimate level right here, 75.98 and a quarter. We need to take that out in order for this to be a failed breakdown. First line of confirmation will be price. Second will be the 4-hour 9. But price is usually good enough for us to get started. So we need that to take out and hold. If it takes out and hold, ultimately 4-hour 9 will take it. That's why I always say it like that. So 4-hour 9 shooting above that. We've obviously touched past that twice today. We've been rejected both times, and we seem to be struggling on what was pretty much excellent CPI news in terms of inflation there. Now, either nobody's believing it and it's going to get changed next week, which is very possible, or we have the underlying current of the market here that is a little bit negative, and we're trying to beat that. You wouldn't know it looking at looking at excuse me, the ES Mini's trajectory right here. This just looks like a nice little bounce, but the undertone definitely feels a little bit bearish. Just scrolling over here to the daily candle, to the 4-hour candles for SPY. We have a similar thing here. This is yesterday's close down here, bounce off the 4-hour 20. We attempted the same thing with the same gap here on this current candle that we're in. Spent a lot of time below the 4-hour 9, bringing that average down slightly, but ultimately we have rose above it. We also, with ES taking that level, that will push SPY up into the 755 range, which would be just under where we had closed our high on Friday. So we'd want to see if we can get into that level and try to push into tomorrow. Now, PMI is tomorrow, which is more on the manufacturing side, but I still think that's pretty important here with all the expenditure side. So if that falls in suit with this, we should see some push and some growth there. If it does not, then we could have a little bit of a retraction. This is not the kind of reaction you want with such great news on CPI as we had. Obviously, geopolitically, this is what's suppressing everything. Part of it. The other part of it is the chip stack that we've discussed before. So we'll get into the chip stack business again in a minute. Let me just show you the day from the open. So you can see the open over here on the left with the big spike, immediately trailing on off and getting back down to levels prior to the 8:30 candle. This is only 10:17. So as I told you, the first half hour was going to dictate where the direction that we're heading in, and the direction was down. Getting into 9:30. Where are we here? So here is the open, and we have the close of that is right. Come on, can we find it right here? Okay, so 10 o'clock heading down. So that was what I was looking for. That downward push here, bounced off at the 8:30 news open. So we did a full retracement of all the gains that we got from CPI. Pushed on up to try to target it here at around 10:30. We did not make the high, so we weren't able to take it. Pushed down and bounced along here. So this consolidation range that we're in right now, with point of control leveling right at around 75.80, is giving us kind of a wraparound bounce here. So this is going to be our range, likely for the rest of the day, 75, 72 up to the 75, 7,600, I think. So yeah, 7,600. So that's going to be our range. We're on the climb right now. We'll see if we reject. If we're able to push through, we will see things begin to escalate. A big part of the pullback, I should say, to do wasn't all just geopolitical. We had some shit earnings come out as well. IBM being number one on the list with a almost 7% drop off their crap earnings. So always nice to see other chip or chip related type companies in failure mode here, which is only bolstering the mentality around it. Uh, Oil is falling off the 83 high on the overnight. We're seeing that kind of puncture down ever so slightly. VIX is cooperating. So everything is lining up here for the push. It just, I'm not feeling it yet. I don't think it's there yet. I think we got a little bit more support to deal with. Here's Bitcoin here on the push. Definitely took out the 63,800 and held position up here. So this is more of a sanity voice in all this. This is what CPI reaction should be like, taking out prior highs for some time and getting us to levels that we can sustain for higher growth. So this looks a little bit better and cleaner. I do like this as a top end indicator in terms of us pushing higher. So this all gives us a nice little path here for Bitcoin. So I like that as it affects the rest of the market in terms of consumption there. All we need now to do to confirm this breakout and this failed breakdown here is to get the 4-hour 9 up above this 64, 120-ish range here. Back testing that range right now, which is good news. Always like a little back test on that type of a move, and then hopefully we'll push up. Our next push could go high. If my negative sentiment is wrong, we could be seeing the weekly 9 up here very, very quickly. And then we'll start crunching these numbers in faster because things will be moving quicker. SPY on the daily, just giving you some reference point for where we are. This is the channel we are in right now. Let me clear all this out of here. I'm going to do that after I get off. I'll clear all this out of here and I'll redraw these channels for you for tomorrow morning. But essentially, we've got, if you can use this trend line right here, this is the trajectory that we are following. We are outside the wedge. The wedge is no longer a factor because we have exceeded the ability for the wedge to exist. So we just take that off the chart. Try to run the top here too. This top looks pretty significant here. So we've got a really nice tight channel that we're in, which should give us a great trading range to trade off of. I will get that on the board for you. But the top of that right now, if I had to guesstimate, is going to put you for today at around 759. I don't foresee seeing that today, just letting you know. Bottom is easy to target, which is right here at 744. Nice big range here. We'll plot the middle too and see which side we're favoring. That will give us indications to the likelihood of rolling or continuing on. So I'll get that all sorted out for you guys. We've got Tesla here on the pullback again. I told you guys I wasn't really comfortable with where it was on the open. It looks like it was shallow in terms of its growth on this. We're coming up on earnings, and I still don't have a solution here because we are stuck in range. So this is just not a play right now. It's going to. You have to understand what happens with these high moving tech stocks when we get into earnings and everybody tries to play the option side of it. Ivy is through the roof. Both sides are whacked equally, forcing price on options to collapse immediately after. Whereas if you were at certain ranges, you would have profited. But since the Ivy pulls a rug out, you're not. Why is that important? Because you want the play to be in here right before earnings to get that in. But there is no play here because we are trading in range. I'll give you an example real quickly. Let's say you bought a contract with a 400 strike, okay? And let's say that contract is, I don't care what date it is. I'm just going to give you an example. Let's say that contract costs you $100. The IV on that contract, let's say you bought it 2 weeks ago, it cost you $100, and nothing's happened. So the contract's worth 90 here today. You've had very little. Um, you're just sitting kind of at the same level that we've been at, even through all the ups and downs. Let's say you're just somewhat neutral, so you're only at 90. What happens is the IV on that will continue to escalate, making the contract worth more and more and more as we get closer to earnings date because of the volatility and the likelihood of that contract actually being swept in. So the sellers are trying to increase their profit by pushing it out there. So now you need to hit, let's say, 400 to get to be break even. Price opens, closes, and then the contracts can no longer be sold. IV collapses after the range is shot up to 425 down to 380. This is exactly what's going to happen. We're going to see 375 up to 425 or more in volatility. We're going to grab a price, volatility is going to collapse, and now your $400 con that was worth 90 is now a $400 con, even at the same price that we opened at. Okay, if it stayed right back in the middle, that IV disappears. Your 400 strike contract worth 90 is now worth 40, and that's how they nail you on all three sides of this. So unless we have a directional angle we can play, it's not worth playing a short-term contract, meaning a week or so out from there, unless we get some more action in here and get this thing to on one side of the coin. We're just charging right down the middle here, and there's just nothing here to play. So it's not worth it to me right now, and I haven't seen an exit door or an entry, I should say entry door anywhere through here, even through this kind of wedge-shaped piece that we're in here with the floor here obviously does not want to see levels below 392-ish or 392-ish or 390. This is obviously a floor that doesn't want to peak. We will likely break that on earnings. That is not to say that we're going to have bad earnings and push us down. It's to say that the range that we run is going to jam IV through the roof while contracts are frozen and then rip the rug out from underneath it so that they are worthless. So not worth the play unless the play is the next morning. The play is after earnings and that next morning. If we have a massive crush down, the play is to buy the oversold. Or if we have a push up, the play is to find your right entry on the scale in and not be stuck buying the top at the same time. But the likelihood of Tesla going down and continuing to go down after this, I think, is lower than it going higher. The only part that I would like to see is maybe we get a complete retracement of like 4 weeks back into here, into the lower ranges where we can actually push ourselves back higher. So that's where we're with Tesla. Amazon is, static. It's just doing what it did yesterday. I told you we'd have the opportunity to hit the weekly 9 again. We have not done so as of yet. We've got another candle today to give that a shot. I'm going to move this exit out of the way. Don't know why I left it there. Sorry. This doesn't work unless I move it correctly. So anyway, but we are above the 4-hour 9. Weekly 9's coming down. We've got some good pivot points here to play with. So looking forward to seeing that hold and continue up. Daily 9 as support below has held. 4-hour 20 as support has held. 4-hour 20 did not cross the D9 yet. This consolidation range is getting tighter here. Would like to see that compression result in a 4-hour 9 push, which can only happen if we get price to spike up, which is what Amazon looks like it is poised to do. Soxol. So this is the unfortunate one. This is what I told you guys have been saying loudly is my concerns. Looking at spikes to potentially take profit out of after we've kind of done average downs and stuff like that here, not seeing a clear path upward, seeing a very, very clear channel down here like this. We need to break that pattern. Sorry, let me get that straightened out a little bit. So we need to break this channel. Yeah. So here's our bottom, here's our top. This is the channel we're in on a down slope. We need to break this on the upside. We came close. We still have the new candle just popped in right now. We still have the opportunity to push up on through it. I do think that the chips are going to fight back in this and take it. I'm just not so sure how much punishment we need to have and if geopolitical really is affecting this or if this is semi-fatigue. Semi-fatigue kicking in over a couple of things: valuations, growth rates, etc. All things that keep proving to be feasible, but more and more high, or the trajectory problem that I'm talking about that I've been looking at, which is AMD's value escalation and the lack of reconciliation on AMD. AMD needs to come down to warrant its price to be able to give everybody else their growth rates and trajectories as formed. If it doesn't, it continues to mock the cohort and basically make everything look a little foolish. So that's, I think, one of the reasons why we're having some trouble with Soxel and MU, even though Soxel does contain AMD and that's part of the cohort in there. Straightening that out will have a rapid whiplash effect on the rest of them to be able to come in and provide supports. If you just jump over to MU today too, it's just doing the exact same thing, sitting in between here. Let's see, is Soxel right in between? I didn't take a look when I was in there. Yeah, Soxel is not in between, but it's right at that level there. So Micron, we all know it's going to 1500. Is how do we get there? Now it looks actually a little bit more favorable for Micron in terms of being able to create a new floor here, but the floor is pretty flat. It doesn't have a huge trajectory here. I'm just going to draw a random line here to show you just some support. So it doesn't have a huge trajectory here, but it's okay. The top line of it doesn't work. The using a top line down doesn't quite work. It could. It's just too steep a wedge. When they get too steep, they don't count. They don't work right here. So in terms of that being our push down here, we are actually sitting on the edge of it. So potentially a breakout from a wedge, but I don't actually see it that way. I see this trajectory as unfeasible, and I see this bottom as low. So I look at all of this and I say we are not in proper structure right now. We are really just waiting for us to break out on these estimates, get on top of them. They need to start separating again. We are too concentrated in one price. That will cause a squeeze and will cause us to force directional change. But finding price is the part we want to be on top of. I do believe that that will ultimately push us upward. That will be where we price search to. So getting there will be a little scary, but it will fall through. And here's exactly what I said I wanted this morning from NVIDIA. We have the bounce off here on the first candle, coming back up and giving us a smooth trajectory so that we can continue on without shooting up 100 points, right? So now we have that. We've got this nice little trajectory growth line here. We toppled out again, which is the only concern I have here. We need to break this levels here, but we did actually print a new high today. So we've achieved that mission here. Everything is fair game between here and the 4-hour 9, and that's the way I want to see it. 4-hour 9 retest, keep pushing on up and push on up nice slowly, 2-3 points a day, something like that. Big run today at 7 points, but obviously that was the recoil from the breach and the 4-hour 50 support. So all looks well there. 4-hour 20 is going to retake this area here tomorrow, which means it's going to cross through a pile of SMAs here that are important. That will give us a little bit of a kick forward. Some of that is already built in here through the algos that are aware. But retail will definitely give us a little excitement here too. So there is some positive news here in the sector as well, and that will be our leader and what we want it to be in terms of growth for the semis is letting NVIDIA take control again to push us through. um, Netflix, yeah, still didn't do anything here. I might be, it's same thing I described before with Ivy is true here, except for one thing is that the Ivy isn't as difficult on this because we're at such a low level already that it's just not even, you can see it in the price. So it isn't hidden as well on here, but it's still viable. So looking at this as a short-term run to see if we get the spike out up to the weekly 9 for a nice little punch here. I'm still going to look at doing that. I might find my entry tomorrow morning on that. I'm going to take a look and see. Um, Credo. So yeah, tough morning for Credo. We had exactly like I said here. We had this full range at the open. We were at that top point. Look to offload and minimize your interest in it at this level because we had already done a full range of trading prior to the open. So we went from the overnight session from 231 to 253. Okay. And so I want to make sure that you guys got out up here with your overloads. If you want to carry stuff forward, that's fine. I am as well. But did not love the pullback here to the weekly 9 and stagnant there. This is us on the 5 minute chart. We've done nothing. We came down, back tested the weekly 9, bounced off it. Our bounce didn't push us up higher. We rejected prior hand. That rejection was very, very weak and came back down, tested the weekly 9, but instead of testing it and bouncing, we tested and we had a quick little spike, which was like a millisecond, and then we just sat here. Good news is no, have not printed a lower low yet since this morning's first fallback. And so if we can maintain that and try to bring ourselves above the weekly 9 to close the day, we've got a shot at actually a nice gap open tomorrow. But this candle configuration can go either way. Second, we print a lower low one, then it's off the table in terms of knowing. But I did try to draw you a little bit of light to show you how very low the trajectory angle is for here. That being said, let's bring in some more candles here so you can get a little better view too. This formation is not uncommon for CRDO either. So we have the similar formation, double top type configuration, which pushed us down. We have the bounce on that. We've got 1, 2, 3, 4 rejection points at this level on the down. So pushing up is definitely viable. The prior to that, looking back here, we have definitely, I mean, you can see that we are in key level range here from all the tips and wicks that are touching in this crunch area here at 238-ish, or right around where the weekly 9 is. Short-term supports on the 4 hour have all folded with the exception of the 50, which still holds us here. And typically, CRDO doesn't like to live under the 50 for very long. We've already extended our welcome. You can see here we've got a couple days worth. We are already below. We've already exceeded that amount on here. So either that 450 folds, or we come back and retake it. And I think that happens this week. So we will probably know more tonight, actually, in terms of direction. I'd like to see this have been our low. We spiked up, came back tested, and then we start to run. That's what I'd like to see, but we'll see what actually happens in the overnight session. CoreWeave, again, I told you guys I wasn't excited about this yet either. It came back and did something very similar in its back test, but we did print a new low today. So CoreWeave's off the table for right now. We penetrated the exit. It's done. This exit wasn't even a real exit. This was just this was just moving it out of the way. It's like hitting it like a target though. So CoreWeave is still going to hold back on this one and wait. Wait for a good entry here. I will source one shortly. The problem we have with this right now is trying to figure out the formulas for the things that don't exist here. Structurally, I've got a couple of key points down in here. They're very, very low though to get here, and I'd like to not see CoreWeave down in this range here. I may actually take this off the list and not really track it anymore. It really depends. I, I think that the whole um, space in terms of being crowded by the Mag 8 and their extra compute is kind of bogus, but that realization hasn't come yet. I can't be the only one that knows that, so I have to wait till everybody else figures it out. And once they do, then this will come back into play. So maybe not worth talking about so much until that actually happens. Um, there's a lag. Always there's a lag. Apple, we talked about this too this morning. I think the play was perfect yesterday when we said, sell off into here, watch out for the fake out. Don't get caught going back below the 4 hour 9. All of that worked and played in your guys' favor based upon any run up from the lower levels that we had here. Again, we're sitting below the 4 hour 9. I don't love its reaction here because there's no urgency. Apple without urgency tends to cause pullbacks. I did warn of a potential daily 9 pullback today, and we did see that basically right here, just shy of it. So that's in place. That could give us the run up. If I want to create something, I can. It's not too hard to do here. So there's my structural bottom here and the line that I want to stay on in order to keep this breakout running. Falling below the 4-hour 9 here is fine. That doesn't bother me. If this candle closes above, then it never happened and we'll be okay. If it maintains a lower level at the close and opens lower, then we have problems with the 4-hour 9. And then we'll be looking to maintain this bottom structure here to push us back up, or failing that obviously pushes us immediately into the daily 9 because it's right there. 4-hour 20 is support, which will provide a bounce only, followed by a gap down to the weekly 9. So right now, Apple's outlook is not wonderful, but if it can maintain this bottom threshold here, then we can push higher. The only reason we'll know if we get higher is if we get above this candle right here at the 317.86 level. We do not need to topple this all-time high yet. We just need to get above here. So off that spike, and then we'll continue to push on up. So want to see that happen by week's end, really by tomorrow. I'd like to see it happen by, but that's what we're looking at there. Google. I don't think we talked about Google this morning, but Google, big disappointment last couple of days. Yesterday kind of pushed down as well. We've got the bounce off structural support here, which also happens to be Friday's low. That back test here today, which just happened in the last couple of hours here. That was today. Almost setting new lows was starting to give me a little bit of thoughts of a major pullback down here. It survived though. So we have the bounce. You can see it clearly here and the pullback and then the push up higher. So Google is in an upward trajectory, which is recovering. Here's the breakdown level at 360-ish. So if we can continue to push on that and take that with price first, then this will be a failed breakdown. If we do that again with the 4-hour 9, that will be a confirmed failed breakdown for this particular level, but we still have a long way to go. Weekly 9 is the sword in the stone here. We need to get that out of the way in order to keep on going. So I will keep a heavy eye on that. If you're looking for a Google entry, 4-hour 9 is turned down. So any back test down here to this that hold would be interesting because it's right about ready to split on the upside. So anywhere here that you're thinking about the 4-hour 9, as long as you can hold above the 4-hour 9 here, use this trajectory line that I just drew as your backup support. So don't hold the 4-hour 9 if it's down here, right? You want to hold it on this pink line going upward here, which, for today, that'll give you a floor of 353, 354-ish. And you want to stay above the 4-hour 9. Let the 4-hour 9 curl and come up, and then you could actually ride that up to the weekly 9 where a decision will be made. So nice little run there if you're looking for an entry. If you want to play it safer, then you're just going to wait for the bounce off the weekly 9, which will back test the daily 9, which will act as support, and you will buy here. Don't buy it on the first pass. It's definitely going to see it twice. That weekly 9 is strong and has been pushing back every single time. So I expect the daily 9 back test from taking it first and off the weekly 9 back this direction. So that'll be my purchase here for Google. If I was looking to enter Meta, so Meta, nice run. It's been holding itself up here. Typically, Meta does this for like 2 or 3 days, and then it gaps down, falls its way back down to find support. But the good news is that this time supports have come in line pretty quickly. And we're also consolidating in a tight range. When we consolidate tightly like this, that means one of two things. One, take care, Big Daddy. Um, as we get towards the consolidate in this tight range, we tend to be finding a ceiling that is unsupported and that we can't break, or we are looking for supports that are too strong to lose. Now, this line here we've had for quite some time here as the breakout range. That is why we capped it. Let me just remind you guys by scrolling this in real quickly. You can see exactly why that pink line exists, and you will see that. That's the breakdown range right here. So in order to take that level, that means that we are going to be calling this whole mess a failed breakdown on a higher scale. but on the using the 4-hour 9 as our measure. So 4-hour 9 coming up here to take that out has to be subdued, and that's what we're looking at here. So next chance we get to punch through this, I bet we wick above, just like we did here, and then we start testing this area. I think as long as Meta doesn't lose the 4-hour 9 from here too, we'll be okay. I'm okay with it down to the monthly 9 too, but anything below the monthly 9, and we're just going in circles here. So I'm gonna stay away from that for a minute. AMD kind of went through this already a little bit. It's the only one on the chip side that I want to see go down. If I can get that down to last week's low, that'll give us our opportunity for everybody else to force a breakout. As it sits up here, and unrealistically, with outside of outside of range, it kind of mocks the cohort, and we have a problem here. So need that gap down here to do that. And I thought CPI was going to be able to give us that, but obviously it didn't. Either way, you can look at it. It didn't perform super well with CPI news. It did. Obviously, it's higher today than it was yesterday, but continue to fail to grow through that. You can see the spike down here, push up, met halfway. It looks very similar to CRDO's run here as well. I'm not doing SMCI anymore. I don't want to do it unless somebody wants to. And I think that is it. I'm gonna pop back over here, look at SPY again with the fresh candle. So we are 13 minutes away from fresh candles for the VIX and for ES. You can see that the VIX is trying a little bit to maintain this line, but as soon as we lose 17,325 here, we should start reaching down towards 16 and a half and target that. Whoop-de-doo, look what we got here. As of tomorrow, contract change, everything goes into complete disarray. So all our numbers will shift tomorrow with the contract change. Do we have that contract change here too? Trying to see. I don't know why this is highlighted. Oh, because of that. No contract change on ES there. So yeah, contract change on VIX tomorrow. That will definitely throw. So that's what's going to blow us through here. That's what's going to either drop us down below or push us up higher than these MAs. So you can thank the gods for the contract change to cause some volatility while PMI comes here and makes it all triple confusing. On top of the fact that we have monthly option expirations too coming up. All right, SPY here holding the 4-hour 9 very steadily. You can look at this pattern here. Everything is it's a meandering route. I actually like the trajectory of the 4-hour 9 here like this. If we can maintain that, in order to maintain that, we need above and below candles. So today we already had our above candle. Here's our second one above. They don't have to be on top of each other. They can just be just like what we've seen here in this back test. 4-hour 20 as our backstop. This is holding. This is a repeatable process. Look at losing the 4-hour 9, taking the 4-hour 20 is holding and pushing us back up, losing the 4-hour 9, taking the 4-hour 20, pushing us back up. They are close together. They need to spread out. Typically that happens in one of two ways. Either price pushes up higher and drags the 4-hour 9 quickly, or we blow through the 4-hour 20 down and we backtest the weekly 9 or monthly 9 or down below, which drags everything there and forces out of alignment where we can then reconstitute and rebuild. So those are the two options we have here. Right now, it's looking like we're going to get the slow growth up, which was fine with me. I'd like to see this kind of take us up a little bit and see the semis follow and get their rebound here instead of having such a short-lived spike. But we will see more on that in the overnight. As for right now, if you're looking for an entry on SPY here, it's really, really hard to make this call, and I'm going to make it anyway because you have two kind of competing things going on. One, I don't love this area. We keep bouncing off the ceiling, and we bounce off, but the bounces have been less and less evil. So we've been able to provide support in range to hold this. We're close to the 4-hour 9. This is that opportunity. You have the 4-hour 9, and you have below it the 4-hour 20 as backup support, which you can see is held. This is the right time technically to do this. I have some difficulty with the ceiling, but that shouldn't prevent you from trying because this is the spot to try. So you try here, keep your stops in place. You're going to want to use a 4-hour 20, anything below that as a jump. You can see our cushions have been above, which has been good. So that gives you kind of the 4-hour 20 as a real guideline here to support that. Obviously, anything overnight is tricky. XSP is preferred on the options side. If you're buying straight out SPY or SPX, you can just use this 4-hour 9 on there, and you can set your stop losses in play. 4-hour 20, taking the daily 9 in the overnight, we will open with that higher, so that should help give us a little bit of a boost too. Only things that kind of screw all this up is more of these earnings releases that go in. We have banking sector earnings stuff coming out too. I don't even know what's happened there yet. I have to actually dive into some of that, but I kind of like where we are here from SPY's perspective, just not the cohort. This won't translate to the Qs because of the semis. Qs are going to have a little different outlook here. Same kind of idea, but we need this to hold a little bit better and push up higher, which it's not going to do until the semis actually get their act together. Just looking at my other charts here for a second. You guys can't see. Let me just quickly. Yeah. Yep. So that's where all that is there, and I will now take requests. And I already saw my first one. Let me go over here. IBM. Look at that. Look at that. 71 points, 20, almost 25% down. 25% of IBM was destroyed today. Phew. All right. I didn't even see how bad the earnings were. Let me see how bad they were at first. Just out of curiosity. They missed by 2.7%. They missed the revenue number, which is horrible. Okay. Yeah. Well, I don't know. It's oversold probably. Look at the floor where it met though, right? So we've got this kind of stagnating double bottom here. That might actually provide good support. Let's see here. Interesting. Interesting. Well, I'm not a big IBM purchaser here, but I will say that we held the low from not last week. This is May 13th. So we've held that low, and typically, and that low is higher than this low over here. So we have a floor. That's kind of a nice floor. Let's see if that works. Let me just drag this up a little bit. Come on, give it to me here. Sorry, I'm not trying to waste your guys' time. This actually is a really interesting spot right here. So if I take this floor here and I let it run, come on, give me the bottom. Come on, move, move, move. A little bit up. Look at that. So we have an exact point right here of a bounce. So we're going here, 2, 3, that whole floor system actually worked out there. So this is kind of like the softening of a change. So what will happen is this will bounce back up and then we'll find this peak here. So we'll find 258, 260s. That will be the target from coming off of this floor if it doesn't just collapse. Then it will come back down lower. So then we'll start to see lower lows and we'll see this whole thing shift over. So this is what like watching a mega cap kind of roll over with price action. Really cool to see when it's being formulated this way. Anyway, something to look out for. If you're interested in short-term plays, I buy this bounce up to wherever in the next couple of days you'll get something out of it, but then you want to exit immediately because this is probably going to fade down lower as we saw there. Let's go here. So Nimbus, NBIS. All right. Yikes. Okay. Double bottom. Losing grain here. We have false support. We have a false support here. This support, where this bounce here needs to take that out to be real. 30-minute 9 is prevailing. Look at it running right with the view out there. That's not going to go on the first shot. On the 4-hour, we get bigger problems. Let's see. Grow this out here a little bit. See if I can drag it back. Damn it, IBM made me do that. All right, let's see. Come on. Come on. Let's go. I'd like to see what's going on here. Okay. Too far, of course. But what I can do is this. That's what I want to see. Okay. All right, so we lost the floor here. You can see that upon losing that floor, it was pretty dramatic there. Got the bounce. Bounce is going to show us, hold on, I need to support. Where is that support? We're seeing a clear support line. Here it is. Here's your support right here. All right, so that support, if lost, brings us in steps. First step would be down to 175. Um, so precarious range here. Don't like it. This is an evolving downward chart trend. It did hold a higher low versus over here, which is promising, but I don't give it too much credibility yet. You're at the bottom, right? You're at the bottom. The question is this the bottom, or is this the first stop to the bottom? I would venture to guess that that if these tops don't hold, and I don't see a whole lot of activity here for that, then I would say that I probably would short this at this point here down to lower levels because it's not holding. If and only if we can hold the level we're at right now, this 194, 196 range here. If we can hold this, then you're going to bounce up. We'll take out these levels step by step. First one's going to be 227. So how do you handle this one? Well, if you're if you're really looking for the upside, you can play the upside now. Use your prior 4-hour candle as your exit, okay? Because if it goes any lower than that, we're losing the prior low. Or just pick this one if you want, 193, 192.67. That would be your exit on the low side for a upward trajectory. If we lose that, okay, then you just short it and you take it down uh, to the 4-hour 200 here. That would be that's the play on this one. Is you could play your upside here on the bounce and hope it pulls you up there. It ain't gonna be fast. This isn't gonna happen in 3 seconds. But you could play the bounce, over the next 2 weeks to see if we can get up here. 409 will be turning here. It's coming down already. So you'll play that rejection, which will probably be in this range. Probably get 3 or 4 days out of that. And then if it goes down below the low here, then you just short it down to the 40200. Hope that helps, Crowbar. What was your take, or what were you thinking? Earnings is in 2 weeks. I see that here right now too. Interesting. Okay, so we're on the bottom leg of earnings, and I got to look at this after the call so I could actually move this thing up. So prior earnings was positive by how much? Got a nice jump on there. Okay. Yeah. So um, yeah, so I would definitely try to take the long on that for earnings if and only if we can get. Sorry, let me do this again. I hate not being able to talk. Some things are just too visual. Come on, come on. I need to find a way to turn off that feature. Okay. Yeah, I would take the long on this, but I think I'd wait a minute. I think I'd probably wait and see if we get some slippage down here. If we get a little bit of slippage, that might make it a little easier for us to kind of take the run up and take a little bit of the IV crush off of us. I don't think Nebius has the same type of IV crush that Tesla does, but it definitely has a little bit. So definitely worth waiting to see if we can get a little bit lower on the run there. Last time's bounce to it gave us a good gap, 173, yeah, to up to 212, 213. So definitely worth the try. Um, yeah, pretty good. Yeah, right a short bounce. Yeah, I think yeah, that makes sense. Yeah, yeah. No worries, you got it, Crowbar. All right. Anybody else? Anything else? 159. We will actually have a candle swap here. Might as well take a look real quick and see where we're at. So by attrition, the VIX will open above the 4-hour 20 and ES will open up higher here, which is good. So a problem with VIX opening above the 4-hour 20 is that we'll have to lose it again, but it shouldn't be too bad. And then yeah, obviously ES looks good. I see they're trying to squash it down before the swap, which is now. Oh, did it happen already? What am I looking at? No, there it is. Okay, got it. There, yeah. Okay, so they just squeezed it in under the 4 hour 20. Perfect. Okay, let's push that down to 16 and a half if we can get there. Uh, and then tomorrow we'll wreck everything with the contract swap. All right, guys, I am going to stop recording. I am pushing that button.